This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil investors will usher in 2024 with gnawing concerns about oversupply, slowing economic growth and simmering Middle East tension that could spark price volatility. Benchmark Brent averaged around $80 a barrel this year, after a volatile 2022 in which prices surged above $100 after Russian supplies were disrupted following the Ukraine war. Prices have been capped this year by a strong dollar and robust non-OPEC output despite demand hitting all-time high of more than 100 million barrels per day, BPD.
U.S. crude inventories declined by more than expected last week as refiners took advantage of cheaper local barrels, while fuel stockpiles rose, the U.S. Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 4.3 million barrels to 440.8 million barrels in the week to December 8, far exceeding expectations by analysts in a Reuters poll for a 650,000 barrel drop. Benchmark U.S. crude futures fell under $70 a barrel last week for the first time since July, giving refiners an incentive to purchase more feedstock locally.
Moving on to the top news in the energy sector.
Singapore's Maritime and Port Authority, MPA, said on Thursday it was seeking proposals from companies to supply methanol as a marine bunker fuel at Singapore from 2025. The call emerged ahead of an expected uptick in methanol-powered ships, as companies ramped up orders of such vessels amid plans to cut carbon emissions with cleaner fuels. The proposals have to look into methanol supply sources, the bunkering operation model at a commercial scale and ways to physically transfer methanol.
Oil prices rose in Asian trade on Thursday, extending the prior session's gains, on a bigger-than-expected weekly withdrawal from U.S. crude storage and an improved outlook for demand after the U.S. Fed signaled lower borrowing costs for 2024. Brent futures rose 41 cents, or 0.55%, to $74.67 a barrel as of 0658 GMT. U.S. West Texas Intermediate, WTI, crude climbed 32 cents, or 0.46%, to $69.79 a barrel. The market rose in the previous session on worries about the security of Middle East oil supplies after a tanker attack in the Red Sea. Next, we have the top news in metal markets. Chinese iron ore futures extended declines on Thursday, as the market digested a lack of new stimulus measures and data showing weaker than expected bank lending last month. The most traded May iron ore on China's Dalian Commodity Exchange, DCE, ended daytime trading 1.05% lower to 942 yuan, $132, a metric ton. New bank lending in China jumped less than expected in November from the previous month, data showed late on Wednesday, even as the central bank keeps policy accommodative to support a feeble recovery in the world's second-largest economy.
Prices of base metals rose on Thursday on outlook of a potential interest rate cut in the United States next year and that the Federal Reserve's rate hike cycle has come to an end. 3-month copper on the London Metal Exchange rose 1.4% to $8,447 per metric ton by 0649 GMT, while the most traded January copper contract on the Shanghai Futures Exchange advanced 0.4% to 68,190 yuan, $9,555.91 a ton. Fed Chair Jerome Powell said the historic tightening of monetary policy is likely over as inflation falls faster than expected, with a discussion of cuts in borrowing costs coming into view.
We will now look at the top news in the agricultural sector.
Chicago soybeans were largely unchanged on Thursday after a 2-day slide, as expectations of rains in Brazil's parched oilseed producing regions continued to pressure prices. Wheat jumped 0.7%, while corn futures gained ground. Soybeans are being driven by Brazilian weather forecasts which are showing some rains next week, said one Singapore-based trader. The wheat market is just recovering from last session's losses as there is some buying interest at these levels.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.